Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, the Dow's down about 100, NASDAQ's up about 60. All right, we had a lot of good news today, right? I mean, we got the inflation numbers. Inflation's going to go down to zero. The numbers came out good. We got no recession anymore. The recession's off the table. It's not going to happen. We got a booming economy. The banking system has been saved. Everything is great. Not my take, but that's what the market is pricing in right now. The market is priced for perfection. The market is priced for like we're in this new bull rally. I don't see it that way. I really don't. Look at the stock market is expecting the Fed to come out and pivot soon. I don't see it. Yes, they may pause, but I don't see them bringing rates down. I don't see that, but that's what the market's pricing in. The market's pricing in that the debt ceiling problem, the debt ceiling's going to be solved. There's not going to be a default. I don't see it that way. Now, yes, I do see that they will eventually work out the debt ceiling problem, but they're going to fight like cats and dogs. They're going to drag it out till the last minute. They're going to be the reason that the market comes down. The market's going to come down by 20-25% from where we're at now. Now, we had that number come out on inflation today, and we shot right back up on the S&P, right back to the 4150, which is in that resistance zone, 4150 to 4200, but they can't break it through there. Maybe we get a head fake up to 4200, but I'm telling you, this market is primed for coming down. I think it's going to come down about 20%, down to about 3400. Retest those October lows. Now, once again, this is just my take. Your take may be complete opposite of mine. Anyways, let's get over to the real estate market. Now, there's a lot of confusion out there in the real estate market, and a lot of people are confused with what I think. A lot of people think I hate real estate. They think I hate the housing market. Look it, I'm a real estate broker. Real estate's my life. It's my business. I love real estate, but this is not a good time to buy. That's all I'm saying. This is not a good time to buy. As a matter of fact, this is probably the worst time to buy I've ever seen in my career. My career's been very long. I've never seen it like this. We got rates up high. They jumped up by 100%, went from 3% to over 6%. But prices didn't come down at all because apparently rising rates are making houses go up higher. I don't see it that way. Look, this is just not a good time to buy. Yes, I own my personal residence. If I was smart, I'd sell it and buy it back later, but I don't want to move. I love where I live. Okay, so that's my take, right? But my take is that houses will come down by 50% and you should hold off if you're buying. And everybody's saying, but Mike, I'm losing a lot of money on rent. Look, if I have to rent another 2 or 3 years, that could be $70,000 that I'm just throwing down the drain. Well, let's think about this. In a lot of areas, it's much cheaper to rent right now than it is to buy. So let's just assume that houses don't go down. Let's assume that I'm completely wrong. And let's assume that they stay right up here, really close to the price that Billy Bob got out at. Let's say they stable for 3 years. The houses aren't going to move for 3 years. They're going to be right where they are now. All right, so let's say you could rent a house for $2,000 a month, right? All right, $2,000 a month, $24,000 a year. What is that? About seven. Let's call it $70,000, $75,000 for 3 years, right? All right, let's say you go and buy that same house. Going to cost you $3,000 on that mortgage. $3,000 for 3 years. 1 year, $36,000. 3 years would be 108, let's call it. Okay, so basically you could save $36,000 by just staying in a rental, but it could be much worse than that. Look, you got to pay property taxes, you got to pay insurance, you got to pay expenses. Oh, my neighbors, they got a big expense. The main water line broke. I mean, they're digging up concrete over there. Going to cost them $25,000 just to fix the main water line. That's crazy. Look, at expenses can be very high. Home ownership, the cost is high. And if homes are not going up, it's going to be painful, especially if homes start to drop. What if the house goes down 100,000, 200,000 in the next 3 years? Well, you would have been much better off renting. Now, I agree that home ownership is a great thing, and it's a great thing, right? But it's not a great time to buy right now. Other agents will tell you, Mike, this is the best time to buy. It's always a great time to buy. That's what real estate agents are programmed to say. I'm just not seeing it right now, okay? I'm seeing it as a terrible time to buy. Now, look, there's going to be opportunities when house prices come down. There's going to be opportunities. They always revert back to the mean. And to revert back to the mean right now, because we had so many up years of 20%, I'm sure in your area this year is going to be up 20% because your area only goes up, and I get that, right? But look, eventually you're going to revert back to the mean. It always does, and sometimes it overshoots and goes down the other way. Right now we'd have to come back down by about 50% just to get down to the mean. Now, what if we overshoot and go the other way? Oh my goodness, it could get really ugly really fast, and that's what I believe. Now, I don't believe in this black swan event that's going to come out of nowhere. I believe this is common sense. I believe that we can see what's going to bring the housing market down. Look, you got commercial real estate in a disaster zone. That's down already about 80%. That's not a black swan. You can see it. It's happening right now, right? All right, the debt ceiling problem. You can see it. They're going to fight over that. They're going to fight over that. They're going to lock things up. That's going to bring the stock market down. People are going to be in trouble. They're going to have to sell their house eventually. There's going to be some forced selling coming onto the marketplace. And talking about the banking system, oh, it's still messed up. I'm telling you, there's going to be so many bank failures. These are not black swan events, right? You can see these happening. You can see that a recession is coming. Most people say it's not. I totally disagree. Look, they say, Mike, it's different this time. We're just going to print money. The Fed has us under control. There's not going to be any recession. I disagree. There's not going to be any job losses, Mike. Look at the job numbers. They've been up 13 months in a row. Do you think these job numbers are rigged? I think they are, because I see a lot of layoffs out there. I got a lot of friends that are laid off right now. These were people making $250,000 a year. Now they're collecting unemployment. $25,000 doesn't cut it. They can't make their mortgages. Look at where the houses are going to come on the market is because they're going to be forced onto the market. People are going to lose their jobs. They're going to get in trouble financially. It's just the way the world plays out. It always does. You can tell me it's different this time, but I'm not buying into it. Look at pension. Pension funds are in trouble right now. Insurance companies are in trouble right now. Why? Because they can't get the yield. The Fed held the rates at 0%. So what did they do? Well, pension funds, they base their pensions on making 7-8% a year, but they couldn't get 7 or 8% a year. So they had to go out on the curve. They had to go out and buy things like commercial mortgage-backed securities. Now, did they buy them with cash? No, they bought them with leverage. Sometimes they were borrowing money from the Fed, going and buying these things. Well, what happened? Well, they collapsed. They went down in price, right? A lot of people, a lot of these pensions and also savings and loans. The mortgages, they bought the car debt. What am I trying to say here? Anyways, the car loans, there you go. Okay, so they bundled up these car loans, right? And a lot of these pension funds, they bought these car loans because somebody had to buy the car loan. Somebody had to fund those. So they bundled them all up, and there's people defaulting. You see, there's a lot of remorse in people that went out and bought cars $30,000, $40,000 over the retail price. Well, the car prices have come back down. They're actually down below retail price right now. If you go to a dealership now, you can get a car below retail. Okay, so the prices have come back down, but their loans are 30 or 40,000 above. They're having a lot of remorse. And I've never even heard of this before, but they're having loan modifications on car loans. They're modifying the loans like, oh, you can't make your payment? Well, we'll lower your payment. We'll just put the big balloon at the end. Oh, you need more time? Okay, you're at 7 years. Maybe they'll put them out to 10, 20, 30-year car loans. I don't know, but they're doing car loan modifications ramifications right now. But there's bag holders. The bag holders are the pension companies, the insurance companies, the banks. These are the bag holders. You can see this coming, right? I can see it coming. It's common sense. It's not a black swan event. This is actually going to happen. It's going to play out. Now, in the housing market, let's get back to that. Okay, it's going to be much worse than they're expecting. I'm telling you, it's going to be much worse. Why? Well, I actually think rent prices are going to come down. Now, are the rent prices going to bring down the housing market with it when the rent prices drop? Or is the housing market going to drop and then bring down the rent price? It doesn't matter. They're both going to be coming down. Now, why do I think the rental prices are coming down? Why do I think the rental market's dropping? All right, well, look at Airbnb today, right? They just came out with their earnings report. Well, their stock just dropped 15% because they say the demand is starting to fall off a cliff. Well, all these investors that have these Airbnb units, they're going to be dumping these units onto the marketplace. They're going to be wanting to get out because the demand for rentals is going down. Now, I never thought it was a good idea to turn our houses into hotels. Look at our houses aren't sold to be hotels, but Airbnb has turned every house into a hotel, brought those rents way up because you could get daily rent. So the rents, they skyrocketed. But as people get out of that business, as people dump those houses onto the market, as rents start to come back down. Look at right now, there's 5 million people not paying their rent right now. Look, it's a lot of these are going through eviction process, but the court system is backed up. It's taking landlords 3 months to 6 months sometimes just to get the tenant kicked out, and then they have to bring it to the sheriff, and the sheriff, he's backed up because he's going out every day, evicting people. I mean, when you got 2-3 million evictions going on, that's a lot of units that are going to be coming on in the rental market. Plus, we're building apartments like crazy. You realize a million new units are coming onto the marketplace just this year. That's new inventory in the rental market. So you get a couple million evictions, add another million in, new construction coming on. The rental prices are going to be coming down. They're going to be dropping a lot. And maybe they're what's going to lead the housing market down. But do I think it's a black swan event? No, it's a common sense event. This is just what's going on. I mean, the rental market is going to get destroyed. Look, you put 4 or 5 million people, kick them out, and then you try to rent these units, there's going to be so many supply on the market, it's going to crush the rental demand. Right now in my area, San Jose, San Francisco, both of it, you can get 3 months free on apartments right now. Move-in bonuses, they'll give you another 10 grand just to move in if you sign a year lease. It's getting really competitive, and those rates are not going to stay up. The rental rates are going to come down. All right, so maybe that brings down the housing market with it. Maybe commercial real estate brings the housing market down with it. Maybe the debt ceiling messes up the banking system, messes up the financial system. Look, it's serious. People don't think it's serious, but the whole financial system could come tumbling down really quickly. It could happen. I hope it doesn't, but it could. We're in trouble out there. Everybody was doing the same thing. They were trying to get this yield, and they were going out long on the curve. And now that the rates are up, all of those investments are underwater. They've all collapsed. They're worth 50 cents on the dollar. Every bank out there is insolvent. There's a banking problem right now. There's a financial crisis going on right now, and it's just getting started. And I do believe it's serious. I do believe that they're going to battle the debt ceiling. The debt ceiling is going to bring that stock market down by about 20-25%. Now, I don't think that the U.S. is going to default. Maybe we close all the national parks for a while. Maybe people don't get their Social Security checks on time. Once that starts to happen and the market starts to collapse, well, then I do believe the Fed will come in, and they might not call it a pivot. They just might print 10, 20, 30 trillion dollars, double our debt in like 1 year. Maybe we print 30 trillion this year. You just don't know how it's going to play out, but these are not black swans. These are common sense. This is what's going to bring the market down. Now, this is just my take. Mike. Now, there's a lot of people out there that'll tell you, but Mike, my area only goes up. There's no inventory. Everybody wants to live in my neighborhood. And I think that's great, that your area only goes up. You could become the new Billy Bob. Maybe you're the one that's going to sell at the record high. Maybe you're going to get out right at the top, right before it comes down. I don't know. But this is my take. It's going to come down 50% from the highs. We're already down about 10%, so maybe only 40% from here. Now, I could be completely wrong. You have a different take. Your area is going to double. I get that. That's okay. We can disagree. Anyways, I'm Tall Mike. I hope you enjoyed it today. If you did, give me the thumbs up. Why not? Hit the subscribe button, but get out to everybody. Have a great Wednesday, and I want to talk to you again real soon. Bye-bye.